Good evening, TheoTrade. This is Corey Rosenblumen. You're watching the Theo nightly video for the 12th of January here in 2021. And, well, financial stocks are strong today, but they weren't the strongest sector. Industrials were up about the same percent, which is XLI, and that's a new 52-week high. But the thing that jumped out the most was XLE Energy. That's not a new 52-week high, and it's not saying much. But that is a new 2021 high for the XLE energy sector, and that goes with crude oil, which is also breaking higher and continuing the uptrend on its chart. Now, crude goes together with stocks, and that's because it's an inflationary commodity or an expansionary commodity. If the economy does well, and the broader picture, GDP is up, and different factors of the economy, people can expect to spend more money traveling or driving their car. And that affects crude oil prices along with equities. Now, crude is not, as well, making new 52-week highs. Why is that important? Because things that are, they can be expected to get stronger. And in today's video, I'll come back to this later, but 86 stocks in the SP500 made new 52-week highs today, and some of them are names that we'd recognize. That would include JP Morgan and Morgan Stanley, and some other financial names, which include Goldman Sachs and Caterpillar, but let's not get ahead of ourselves just too quickly. The main news today was that the Russell 2000, which is concentrated in or heavily influenced by financial companies, that made new all-time 52-week highs, etc., because that continues to break to the upside and continues to make new gains. And this is our weekly chart, and the S&P, even though it's up there, and the NASDAQ and the Dow, they're not quite making the same oomph or catch up, right? The Russell had to play catch up, and someone didn't tell it to stop catching up. It has now exceeded that and continues to be strong. And that's again true with the financial index. The other markets, just for example, K is technology. Keep in mind the coronavirus crash and recovery. The XLK technology sector, which is like the NASDAQ, that recovered very quickly. That was into June and July. The financial sector, XLF, just recovered its coronavirus crash. And that did so into 2021, just now, this week. So again, it played catch up. Right? Other indices had already exceeded it and gone far above that level. But again, some were not, financials being one of them. So it has played catch up. It has got all these gains back. And if you're so unfortunate as to invest in the XLF in January or February in 2020, certainly couldn't have seen what would have happened next, but you are finally made whole or restituted on your long-term position. That may not be comforting, but there are people who did purchase into here and held through the whole movement in 2020. So financials have played the game of catch up. The other news that Don is reminding us on evening and weekend videos is the bond market, which keeps selling off. And today was no exception. I'm looking at TLT, which is the ETF. You could just as easily look at the 30-year bond, and that is ZB, or the 30-year or 10-year note, which is ZN. And that had a stellar run off of 2019, 2020, and that is pulling back now, but that's a steep pullback. So that's something to watch as we go forward through January. We saw crude oil. Gold is coming down as well. It's sort of a similar type of logic. Gold and bonds, this is the bond market, was very, very strong, 19 and 220, peaked in mid-session and came down. Gold was strong as well, but it peaked also mid-session and has come down. So that's just playing into this equity creep or additional bullish action in the market, and that is true for all indices. Now let's shift gears to individual companies. On my Thinkorswim platform, I take a look each day at S&P 100 stocks. That is my world for swing trades or even sometimes intraday trades. I don't normally venture outside the S&P 100 for trading tactics or trading stocks or vehicles when trading stocks. So these are just in the world or realm of top gainers in today's session. They include General Motors, we'll see momentarily, Ford, and Tesla. What do these names have in common? They're companies that are car companies. Tesla being the strongest. Actually, if you put them all together, Tesla has a larger market cap than the other motor companies. But these are getting bids. These are well bid and are rapidly bid. Otherwise, Schlumberger, ConocoPhillips, Dow Chemical, we have Intel, and others playing into this either industrial, material, energy, or financial. So what's likely for the future? No big change until the change comes. It's just additional bullish drift, holiday drift, new 2021 drift. We have a lot of political headlines, but if you were not, I guess if I'd say if you're fortunate enough to not be watching the headline news all the time, you would have no clue that anything negative, bearish, or risk-seeking or risk-averse or a negative headline happened last week. Won't talk about it, but it's that the market didn't even know what happened. The S&P is at new highs, and this continued creep or trend or higher highs, higher lows continue into the new year. I promise to take you back here. Now we can take a look at these stocks getting stronger. The logic here is that of relative strength. There are 500 stocks in the S&P 500, and if you take a look at the top names, the ones that are strong, there will always be sectors and stocks within those sectors that are outperforming the market on a daily basis, on a weekly basis, and on a monthly basis. So it's things that are strong, even though the broader S&P is not at this second or this day making a new all-time high. Remember that the Russell index is, and certain stocks will lead the market. By virtue, there are also stocks, fewer of them, but they're making new lows, so they would have relative weakness. The idea is if the market is to continue rallying, rising, you want to back the strongest horse in terms of horse racing, but get the strongest vehicle or trade the strongest stock. The probability is that it continues getting stronger. That's why I bring these lists to your attention just about every week, because the names will be familiar. But right now in the S&P 500, almost 86, almost 100 of them are making new 52-week highs, and in some cases, all-time highs. Again, JP Morgan, we have Broadcom, Texas Instruments, AbbVie, Morgan Stanley, BlackRock, Caterpillar, Schwab, Goldman Sachs, CVS, John Deere keeps coming up, Lam Research, and others. Can't go through them all just in a quick video, but they are there for you to review, to scan on your own time, and chart as you will. The logic is to be bullish or trade in the direction of these trends, not just close your eyes and get long. That's not professional trading. It's to buy pullbacks, retracements, or you may call them bull flags, call spreads, vertical spreads in the direction of the trend, but after maybe a 2, 3, or 4 day pullback, which would be a retracement. And just to quickly take a look at the top names, JP Morgan will play under the financial umbrella, XLF, and we take a look at Morgan Stanley, same logic, and we'll just focus on financials as we conclude this evening's video. And that which is strong does tend to get a little stronger, and we can pick up shares on pullbacks. Something like this, and many stocks are showing this pattern, they don't give us buys right now. We have to wait for that pullback retracement to be safe. And if you can't wait to put trades on, you might want to think about a fade, which is a put type of spread to get a pullback back to that 20 moving average, but that will be an aggressive type of trade, valid, aggressive. It's for short-term trades for a 3 to 4, maybe even a 1 to 2 day pullback. I'd rather wait for that pullback to happen, keep these on a watch list, and then purchase in the direction of that trend. As always, be careful and safe. This is Corey Rosenblum with tonight's Theo video update for January 12th, 2021.